Welcome everyone to the Kendall Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In this video, I'm going to talk about the U.S. inflation. We're going to cover some of the comments that Jay Powell made in Amsterdam, and I'm going to tell you my outlook for inflation, which is definitely varying from what Jay Powell was telling you. Let's get into tonight's video. Welcome, folks, to the Kendall Report. I'm Bob Kendall. It was a very interesting day. While the markets had a decent bid in them, the big event was the PPI that came out. I'm going to discuss what I think is happening versus what Jay Powell was telling you. And I actually told you in the Substack last night that look for a little bit of leadership from Powell to keep things somewhat dovish. And I think he did really good. I'm going to play a few clips as we go through tonight's video and then react to some of the things he said and bring in some emphasis. Before we do, the PPI came in at 0.5, was expected to be 0.3. The year-over-year numbers was actually up at 0.4. It was expected to be 0.23. So basically, while that looked like it moderated a little bit, and some of the revisions that were made in the previous month did not really offset what I think seen. We're starting to see that headline inflation starting to rear its head again. This has happened last month. It's happening again, in my opinion. In Substack, I discussed the element that I think is key is there is some trajectory of the market starting to move higher up against some resistance points, but it's about 0.5 to 0.7 higher than where we currently are. Well, that doesn't sound like a lot. It could keep the markets in a little bit of a quandary over what this inflation scenario is doing. Now, I will go through a lot of details as I interact with Powell. I'll put a couple clips up here that I found really interesting. Let's get into this first clip.
So the U.S. economy has been performing very well lately. We had growth last year of just over 3%, quite a strong year. Very strong labor market where you've got rising employment, you've got rising wages, so disposable income, consumers are spending. Generally, households are in good shape financially, they're not over-levered, and so we see a good picture. Consumer spending has held up very well. As well, business investment has been strong. Businesses are seeing opportunities to invest, and that has helped. I would also point to a fairly large influx of immigration into the country over the past couple of years. Those people are joining the labor force. We're experiencing still a labor shortage in many industries, and so there are jobs, and they're going to work and they're consuming. So that's also boosting growth.
Okay, let's unpack that clip just a little bit. He said a number of things that were absolutely astounding. The first one is that the consumer is just doing fine. They're spending. Everything is rosy, as he would put it. And what we're seeing in the real world, maybe I've watched too many TikTok videos, all the prices are through the roof. The rate of inflation has flattened out, but inflation hasn't gone away. This is the really interesting point. But let's talk about something that he said. He said immigration is helping. Now, I told you this before on this channel, that they are utilizing all of these people coming across the borders for the last 2 years to window dress the economy. This is my opinion. And these new so-called, I'll do air quotes, workers are continuing to infiltrate through all kinds of jobs. If you watch any kind of news today, you see the mayor of New York basically saying, hey, let's put them to work. It's almost like they're creating a new slave class. It's very interesting what's going on in this country right now. But if we go back to that statement, he basically said there's immigration, and then he said there's spending. And this is where I talked to you before about the bifurcation of looking at like retail sales, certain elements of the economy that is growing, and then you go over to the manufacturing side and you're seeing things dipping down. So output of actual manufactured goods are coming down, but the labor force and the retail consumption is still up. And this is how they're cooking the books. I noticed that Powell even used a Joe Biden campaign line, which is consumers are better, people are making more money, inflation is not a problem anymore, and they're playing this off this way, and it is very much a problem. And I'll go through more clips, and then I would demonstrate through the charts I'm going to bring up, and we'll unpack this a little bit further. But beware, folks. Let's see the next clip.
Expect continued growth, 2% or better. We expect the labor market to continue to be strong, but to move further and further into balance. And I expect that inflation will move back down on a monthly basis to levels that were more like the lower readings we were having last year. I would say my confidence in that is not as high as it was, having seen these readings in the first 3 months of the year.
Okay, let's get into some more depth of what Powell is seeing. This last clip we watched, at the end, Powell finally decided to tell you the truth, which he has no confidence in that inflation is going to come down. Throughout this interview that he went through today in Amsterdam, several times he discussed the immigration issue, but he also made reference that higher for longer, all of those references that we're used to hearing are still there. He believes that policy needs to stay as it is before they go forward. So let's just talk a bit about what's going on here. I believe the key element that we want to look at is really going through inflation numbers and actually what's being projected from my viewpoint using our algos. I see inflation, I've been talking about this as well on the channel, doing what I call an echo bounce. So we get this big decline in the rate of inflation, didn't go away, and then we're getting this echo bounce, which means we come back anywhere from 30 to 50% of what it was. So in that speech that Powell was talking today, he talked about it being the print on PPI, I think it's 7.2, and now it's half that, down at 2.7. So just know that they're putting out this narrative, but the reality is that they don't have any faith in this, and he's trying to be truthful and tell folks what's going to happen. He also mentioned in this that he didn't believe that the next action by the Fed would be an increase, but he did believe that it would likely stay where it is for longer than most people expect. That's basically what I've been telling you. After we get into past July, as we come into September, which is the next Fed meeting after the June meeting, then we're likely to see, I think, some movement there. We'll have to see what the metrics look like. Let's go into my expectations for the inflation. Now, I've got a chart up here right now that is demonstrating the CPI annual change, and I've got just PPM1 down at the bottom. It's showing some acceleration, and this is all I'm expecting at the moment to go up to the 10-period moving average, 2.92. The last print here was 2.7. We're not looking at a lot at the moment, but I think ultimately we'll rise above that 10-period moving average as we go down, coming into maybe August or September, and we might start to see some things that are suggesting that inflation is going to get that further bounce back. And just to mention here at the moment, I don't believe that the equity markets are going to get a big hit out of this, but it is going to flatten out the markets and start to bring in a whole nother dialogue if we do see these numbers. I mentioned earlier that the numbers that we're seeing on the headlines are starting to come back up again. Powell blew this off. I didn't play this clip, but he blew it off as, the headline's coming up, but the revisions in the past are telling us that it's still under control. So he's still looking in that rearview mirror, but the front end numbers are starting to come up. That happened last month. I mentioned it earlier, and it's happening again. So I believe we'll see a continuation of this number going up, and what it's going to mean for the markets, higher inflation coming in the months to come, I would say into possibly September, And then from after that, we'll have to reevaluate. But these numbers are going to be contrary to what the Fed's telling you, and the markets are going to be constantly trying to unpack what this means. And at the moment, I don't see it affecting any of the markets right now. The numbers we got today, everybody's okay with. We got a good bid in the markets today. So market perception is still that everything's okay. And I believe that will be the case. It won't be until I believe the July report on CPI and PPI. So 2 months out from now, we'll start to see what I'm talking about. Just make sure you get my Substack newsletter, because that's where I'm going to cover the day-to-day and the micro analysis on the markets. I'll go into detail on this in tonight's letter. I want to thank everybody for watching. I'll see you on the next video, but make sure you get the Substack. Have a great day trading tomorrow. I will see you soon.